Ray Dalio, who runs the largest hedge fund in the world, believes that 2023 is in deep trouble. In fact, he just said this.
Now an interest rate that is high enough to deal with inflation is too high of an interest rate for the debtor. And the dominoes are falling in a very, very classic way.
In addition to that, Michael Burry, who is notoriously famous for calling the 2008 financial crisis and housing meltdown, also just made a tweet implicating that we have another 20 to 30% drop coming in the US stock market in 2023, which would definitely bleed right into crypto and also cause a disaster there. Now, the big question is why do they think this? Well, that's what we're going to talk about today and also share my opinion of why is there the potential for a further downside and why is the bounce that everyone's looking for in 2023 might not be an actual option. Let's get into it right now. All right, what's up, guys? Welcome back to the channel. Again, not financial advice, just me, Fous, making some calls about his opinion, of which, yes, I did just lose $100,000 shorting this massive rip on Bitcoin. But listen, small fraction of my portfolio, lost maybe about 5% of my portfolio, of which it'll make a much greater comeback story when I go back in the green and then have an amazing 2023. Had 1.7 million profits in 2021, 500K profits in 2020. Wait, what's the year? In 2022, 2023, yes, got started off with a little bit of a rough patch here. Confidence is not lost. I fully trust myself, because I've been doing this for 20 years, that we will come out on top at the end of the year with some massive gains. I do believe that there is a shorting opportunity coming up in the markets. Now, my timing was a little off. Again, I knew that 21K and pushing up here was a potential option. Unfortunately, I did not stop out due to sleeping and having no stops, then getting caught in this squeeze, doubling down, and then getting stopped out up here. This happens. It's part of trading, and mostly it was a human error. My analysis knew exactly that this was a potential option. Unfortunately, my human error in greed and sleep and not paying full attention can get you in trouble sometimes, and that's exactly what happened, and that's just part of being a trader. So now let's just get into what's actually happening and why is Ray Dalio saying things like this? Why is Jamie Dimon, the CEO of JP Morgan, also have a little bit of gloom and doom? And basically that clip that I showed of what Ray Dalio is saying, basically what he's saying is that inflation is so high right now, which yes, things are too expensive, so people are going to be buying less things, which eventually is going to bleed into corporate earnings, and then earnings are going to have lower revenues, lower EPS, which will then draw down the price of the stock market. Now, how the Fed is trying to fix this is by raising interest rates to then lower the inflation. But what he's saying is the problem is, regardless of what you do, earnings are going to be coming down, because if you raise the interest rates, it's actually harder for people to borrow money, which means it's harder for people to spend money. So no matter what, if it's high inflation, things are too expensive, people can't afford it. If you raise the interest rates, people can't borrow money because the interest rates are too high. They can't afford it, and it makes it harder for them to spend. So no matter what, no matter how you spin it, there's going to be less consumer spending, which eventually bleeds into corporate earnings, which will eventually be released and then cause a dramatic collapse in the stock market and push us into a recession. I, in fact, talked about this back in July. As of right now, this still hasn't formally played out. We haven't seen a big drop in earnings. Looking at what Ray Dalio is saying and also what Michael Burry is saying, this is also their theory of which is coming in 2023 to potentially 2024. When I said this here on July 16th of 2022, which is now quite some time ago, I said, here's what I believe to be a probable scenario. Stocks are going to push, BTC is going to short squeeze into 25 to 26K-ish, which both those happen and retest the bear channel. Then next quarter earnings are going to be shit. And what I meant by that is that the inflation that is happening is eventually going to show up in earnings. But as of right now, even in January of 2023, we haven't seen a huge dramatic drop in earnings. Yes, it's happened to Goldman Sachs, which they did see a drop in earnings. We saw it in Microsoft, which saw a drop in earnings, but things like Tesla and also Netflix also ripped to the upside on earnings. So we're kind of having a little bit of an imbalance of, are the earnings actually going to be affected or not? Or is there going to be a soft landing and eventually earnings just kind of mellow out? The interest rates do go up, but inflation does go down, and we'll see how it goes. Ray Dalio thinks that interest rates are going to get pushed up again by the Fed, which is not going to be good for the markets and not going to be good for corporate earnings, which will eventually show up and bleed things into the market. Michael Burry, on the other hand, tweeted this, of which he now deleted, and he said, maybe. So this is what Michael Burry is implicating right now. If we look at the chart here on the right, this is from back in 2001 to 2003 when we saw the big collapse. We saw the first drive down here, which we can see here, the first drive down, second drive down, now here, then retesting the 200-day moving average, which you can see here on the yellow line, broke out over it once, came back down, retested, broke out over it again, fooling everyone into that this is a bullish bottoming pattern and then a rip to the upside. But then look what happened, broke back down below the 200 into a massive 20 to 30% meltdown, of which on the current chart right now, we had the first drive down, retest 200-day moving average, retest down again, break over it once, fail, break out over it again, and then now potentially looking for another fail back below the 200, followed by a big 20% drop on the S&P, which would correlate with the actual channel that's forming here right now, and also the previous support levels around 3,200 to 3,300. That's kind of been my target all along. So it's interesting to see him talk about this. Also interesting to see what Ray Dalio has to say. This isn't just my opinion of thinking, I hope everything goes down. If I had to ask two people on the planet about the macroeconomic situation and what their thoughts were, Ray Dalio and Michael Burry would probably be the two people who I would be interested in talking to about, right? Ray Dalio wrote his recent book. It's all about the cycles of empires rising and falling. So he's very familiar with things going up and things going down. Same with Michael Burry. He's very familiar with calling the tops when things get too inflated and then looking for when everything's crashed. I used to do most of my shorting in stocks for 16 years. That was my specialty, was looking for inflated prices, parabolic moves to look for when things are going to be coming down. Can't say that I trust their opinion, but their opinions are very influential in value to me in my own analysis as well. So we'll see what goes on actually here on the S&P as we play this out. We still have more earnings coming out. Obviously, Tesla came out last night and actually beat the earnings estimates. So that's what actually drove the price of the NASDAQ up. We can see intraday futures on the way into the Tesla earnings were down heavily. And as soon as the Tesla earnings came out, we saw a big push back to the upside. And now we're still trending above these levels of actually breaking out on the intraday and daily chart for the NASDAQ right now. Now, I'm not short the NASDAQ. I'm only short the S&P 500, of which if we start breaking back above this line here, which we have these relative highs here, here, and also these bottoms here, if we started trading and sustaining a price of above there, that's where I would officially stop out of my short and be like, okay, maybe this is time to get out of the short, and actually we might see a soft landing and we actually might turn into a bull market. Also looking at the US 30, of which I did just lock in my 70K profit. I almost stopped out right here, but I actually added and locked in my gains here. And I said, again, if we rise back up to over 34K, I'll start adding again. And now we have this new descending trend of which I just added again here. And I have more orders to add again if we start retesting. And if we start getting back above about 35K and sustaining closing prices above that, that's when I'll flip and be like, okay, maybe it's time to get out of this short and kind of change my analysis of what's going on. Brief interruption here, guys. Did you know that 75% of traders have accounts under $25,000? This creates a huge problem because even if you double that account in a year, which is almost impossible, you're still only making $25,000. Introducing Hydra funding, where you can potentially get access up to $500,000 in capital. All you have to do, guys, is sign up for a challenge account, which is going to give you potentially access up to $500,000. And if you earn a 10% profit in this demo account without going into a 5% loss overall or a 4% loss in a day, you will then pass their evaluation phase and yes, get access to an account with the selected size account. And now, instead of trying to double a $10,000 account, you could potentially earn only 10% on a $100,000 account to earn the same level of profits. And the benefits of this are huge. Rather than risking your entire $10,000 on one account, you can use just $1,000 to potentially get access to $100,000 in capital. You can trade crypto, Forex, stocks, CFTs, gold, oil, everything under the sun, all on MT4 and MT5. If you're interested, if you have an account under $25,000, like 75% of traders out there, you're not going to make any money with that account because it's too small. Get access to pro level funding and pro level capital with Hydra funding. Link's going to be below. Based on this analysis and based on what Michael Burry is suggesting, based on what Ray Dalio is also suggesting, I still think we're in the higher probability that we're getting into a fake out zone where everyone is getting way too bullish again, and we're going to see another collapse down to potentially 3,300 to 3,200, which is where I would love to lock in some profits on here. Now, obviously, there was an interesting move that happened here on Bitcoin, right? We did see a breakout above this, which was a very bullish move. As I said in my previous analysis video, while I was short about 17.5, I said if we break out over this, we could easily push up to 21K. Unfortunately, again, human error and greed got in my way. I didn't think we were going to see that big of a move so quickly, and then I didn't stop out when I should have, and it turned into a 100K loss, of which now I have to come back from this loss to then break even for the year and then proceed from there. It's not the ideal situation, but it's not a hurdle that I can't overcome after doing this for nearly 20 years at all. It's just a small blip on the map and another valuable lesson, not only for me, but something for you guys to watch. What happens when you don't follow your stops? Now, obviously, I said before, the account that I had in here that I'm trading with is only about 15% of my capital. I said in bear markets, never put all your money into your account. Use a very small fraction for trading in bear markets. Then once we go full bull mode, it becomes a little bit more safer to make money and make bigger bets. that's when you deposit the rest of your money in an account and just go balls to the wall and you can make huge gains. So for me, I had a very small position size and a very small fraction of my money on this portfolio. And then all I had to do was to get back to break even was deposit another 200K in the account. It's not that big of a deal for me, but most people probably didn't do that. If they got caught in the squeeze, they're probably on leverage and blew up their accounts. Okay. So you can't be doing that with your portfolio at all. But this is kind of my current analysis here on Bitcoin and what the game plan is. Right now, we are breaking back above the 23K level. My plan right now is to potentially get short again if we start pushing into 24 upwards of this high of 26.7, right? So we have this pivot low here, the pivot high here, also the pivot high here. Now, we did see this big fake out intraday, where this big spike could be the top. We don't know. And we also have the divergence here on the FlipX, right? We have the high here with the high here, but now we have new highs, but with lower highs on the divergence. We also have a double sell signal on Momo X. So there's clearly momentum being lost here on this rally, but that doesn't mean that we can't consolidate into another bull flag and then continue to push higher. I think it would be a lot more probable that we potentially see the move to 25K, one last squeeze, one last liquidation event, which would be very nice to get short up there in that range for a potential pullback. I believe we could probably retest this descending trend line, which would also be the retest of the actual channel back down here at about 13.4, 13.5, 13.7K-ish. So that's kind of the outlook what I'm looking at on Bitcoin. This is only if we do see a pullback in the stock market. This is all correlation of if SPX does get that pullback and we do see a recession in 2023 back down to these levels, that's the only case that would then bring Bitcoin back down to this level as well. So I'm not just looking at Bitcoin alone. I'm looking at what's going to happen with the economy and the S&P 500 in US stocks, and how is that going to affect crypto and people's mindsets in whether they're risk on or risk off in their decision making going forward. Also, looking at Ethereum, this also has a very bullish pattern that broke out right here, but we have multiple resistance levels. One right here, this pivot high at about 1800, 1785, plus this descending trend line here, which would then bring resistance. So I'm hoping to see one last spike over this, fake everyone out, and I would love to get more short here for the impending pullback, where we'll probably see a pullback to this ascending trend line. But if Bitcoin did hit new lows, we'll probably see new lows also on Ethereum, potentially down to retest these lows here in the 1000 to the low here about 890. So these are all probable scenarios. I'm not in the camp of thinking that we're just going to go on an epic bull run here. We have seen a massive run to the upside, in which case during bear markets, if you see a massive rally like this, you can easily see a big pullback. Now, for the bull case, I will make note of this because I can't ignore it. I didn't see it until after this happened. And now when we saw the big bull run in 2017, and we look at the TrendX indicator, look what happened when we broke out above the TrendX indicator on volume and a very strong candle. How high did Bitcoin run from there? 214% after a long-standing bear trend. Same thing here. I actually lost about 80K shorting Bitcoin on this run right here. Now, this one was a little bit shorter, but we did see the pullback on TrendX. And officially, once this broke out above the TrendX on the weekly chart, we saw from there quite a big run, 75%. And now we have another long-standing bearish run. Of course, right here, we saw nothing, 10% before it was just a small bear market rally. But now we have quite a long-standing bearish run again, breaking out above the TrendX. And as of right now, we're only up 23%. If we look at the past, right, we saw 75% and 213% runs, which, you know, if we saw something similar, if the bulls did get what they want here, I think 30K would be the next thing in line because we have a lot of resistance at about 30K where these base levels based out here. Okay. So that would be, you know, a potential 53% run from this breakout to the upside. Now, this all depends on if the US stock market can hold up. It all depends on what the CPI numbers are coming out, of which are showing how much people are spending. But then there's also what the inflation is. There's also the potential of the rising interest rates to try to tame inflation even more. And then there's also potential more earnings coming out showing that is inflation and is rising interest rates going to start affecting corporate earnings, which will then bleed into the US stock market and start dragging things down. So these are all factors that we have to consider when we're trying to game plan about where should we position ourselves in the markets going forward. There's also the factor of DXY finally coming back down into this level and finally bottoming out. I'm getting bullish on the US dollar. I've been looking at this chart for quite some time. Now I'm still waiting. My alert has not triggered it for it to break down below this low. I did just in fact get stopped out of gold because the dollar has continued to push and gold has been actually been moving much faster to the upside than the dollar has been pushing the downside, and they usually move inverse of each other, but I would love to see the dollar break down below this low here. And if we can break down below this low, wash everyone out, there's probably a bunch of stop hunting that's going to happen down here, stop everyone out. And then if we can create a bear trap, close back above this level, that'll be a potential confirmed bear trap. And we see a nice spike back to the upside. Maybe not that high, we don't really know, but the next level of support or resistance to get into is right around in this area between, the lows here about 104 to potentially 105 would be a nice rebound here. And if that did happen, that would probably be the nice trigger move, because usually a lot of times the dollar moves inverse of the US stock market as well. So a bounce in the dollar would probably be the catalyst to push stocks down. It would also be the catalyst to push gold down off this major run. Now, a lot of people have been like, why the fuck are you shorting gold? It's going to keep going up. I don't give a shit what gold does in the long term. But if we look at every time gold has made a big run, there is always a massive pullback. I don't give a shit about macroeconomics. For long term, I'm looking at, okay, is there an inflationary chart where it's parabolic, just like the stock market of everything, of which, yes, macroeconomics can affect it. But again, I'm not a long-term investor. I'm looking for moves, for extended moves, and finding the opposite of that extended move. If we look at every run that gold has had here, we saw a run on gold, 7% pullback. We saw another run on gold, 14% pullback. Another big run on gold, 19% pullback. Big run on gold, 12% pullback. Big run on gold, 21% pullback. Now we saw another massive run on gold. There's going to be a 10 to 20% pullback off this top that comes in. Now, the factor is we don't know where the top is actually in, but we are now pushing towards 2000. I think it mostly has to do with, is there going to be a reversal on the US dollar? Because a reversal on the US dollar will definitely start sending stocks down, when also probably signal the top on gold. And as of right now, we have not seen a bottom in on the US dollar. But if this pattern forms out and we get a bear trap on the US dollar, I would also consider getting long the USD JPY for a bounce to the upside, and also shorting GBP USD for a bounce into this, which would also be a bull trap to the upside, resistance here, and then a pullback to the downside from there. This is just kind of the overall global top-down view of what's actually happening in the markets, why charts are going up, why charts could potentially go down, what are some of the opinions of the top experts out there, and also what's my opinion just based on looking at the charts, because I'm certainly no macroeconomist. I look at what other people's opinions are that's their expertise. But anyways, that's just kind of what's going on right now. It's been an interesting start to the year, and I think 2023 is going to continue to be very, very interesting. Anyways, guys, that's a wrap for today, and I'll catch you in the next one.